Hey everyone, welcome back to Corporate Dakota, the place where we make deciphering financial documents as easy as 123. A lot of companies use these reports to announce big things, and today AEye, Inc. is doing just that. But are they sharing good news or bad news? Well, let's plug in our decoder and find out. Today we're peeking into a timely report from AEye, Inc. filed on July 28, 2025. This isn't your typical quarterly check-in, but rather an announcement about a really important update concerning how they plan to raise money from investors. Essentially, they're adjusting the agreement they have with a firm called AGP Alliance Global Partners to allow for more stock sales to the public. This means they're looking to potentially bring in a lot more capital. So what's the big deal here? AEye is upping the amount of money they aim to raise through selling their common stock. This is done through something called an at-market issuance sales agreement. And the latest amendment bumps up the total potential sales to a whopping $75 million. The company has already sold about $23.7 million worth of stock recently. So this amendment signals a move to really accelerate their fundraising efforts. Now, this all ties back to a previous plan AE already had in place. A registration statement was filed quite a while ago and has been supplemented and amended several times. The most recent updates, including the one from July 25th, and now this one on July 28th, are all about fine-tuning the details of how they can offer and sell their stock to the public effectively. The most important part for us as watchers of the company is what this means for their stock. AEye's common stock is traded on the Nasdaq under the ticker symbol LIDAR, and their warrants, which is like a right to buy their stock in the future, are also available on Nasdaq under LIDRW. This filing directly impacts the availability of new shares hitting the market, which can influence the stock's price. Think of it like this: AE has a plan to sell more of its company shares over time to raise cash. They've already sold some, and now they're saying they want the flexibility to sell up to a total of $75 million worth of those shares. This is a pretty common strategy for growth companies that need money to fund their operations, research, or expansion. It's also worth noting that AE identifies itself as an emerging growth company. This means they get to follow some slightly different rules compared to older, more established companies, especially when it comes to financial reporting. And it's important to keep that in mind as we analyze their actions. The core of this report is really an update on a previous agreement. AEye is essentially saying, hey, we're going to continue our program to sell our stock, and we're increasing the total amount we're allowed to sell from this program up to $75 million. This isn't necessarily new money coming in all at once, but it's a signal that they are prepared to issue and sell more shares if market conditions are favorable and they need the capital. Now, this filing also includes a legal opinion from a firm called Allen Overy Shearman Sterling US LLP. Regarding these planned stock issuances, this is standard practice in these types of filings to provide assurance that the stock issuance is being handled legally and correctly. It's like getting a legal stamp of approval on their plan. And as part of that legal process, they also provide their consent to be mentioned in this document. This just confirms that the legal experts are aware and comfortable with their opinion being referenced in this public filing. So what's the bottom line here? AEye is actively managing its capital structure and looking for ways to fund its growth. They're using a well-established method of selling stock through an agent, which is what this sales agreement is all about. The increase to $75 million signifies a commitment to using this method to raise significant funds. Let's look at this from a broader perspective. AEye is in the advanced technology space, focusing on sensing solutions for things like autonomous vehicles and intelligent infrastructure. They've been working on bringing their technology to market, and like many companies in this space, significant investment is required. Companies often use stock sales like this to fund research and develop manufacturing, scaling, and general corporate purposes. So this move suggests they have ambitious growth plans and need the capital to achieve them. Now, for us looking at this from the outside, it's important to understand that when a company sells more stock, it can dilute the ownership percentage of existing shareholders, meaning their slice of the pie gets a little smaller. However, it also provides the company with the resources to potentially grow its overall value. So what's my take on AEye from this filing? Well, the company is clearly proactive in securing funding for its future. This $75 million authorization is a solid amount and shows they are strategically positioning themselves for growth. However, we also need to remember that selling stock can dilute existing shareholders, and is always crucial to look at the company's underlying business performance and competitive landscape outside of just these fundraising announcements. We've seen companies raise a lot of money and still struggle if the core business isn't performing well, or if they face strong competition. AEye's success will ultimately depend on how effectively they can deploy this capital to bring their innovative technology to market and gain significant traction. Ultimately, this filing is a signal that AEye is dialing up its fundraising efforts to fuel its expansion plans. It's a move that could pay off handsomely if they execute well, but like any investment, it comes with its own set of risks. Thanks for tuning in to Corporate Decoder. What are your thoughts on AEye's fundraising strategy? Let us know in the comments below, and if you found this breakdown helpful, please give this video a thumbs up and subscribe for more regular insights into the world of corporate finance. Join our Discord community, linked in the description, for even more discussions and analysis. See you next time.